here to meet Raamdeo Agrawal, the trusted investment guru of millions of Indians. Not just an ace investor, he's built Motilal Oswal Financial Services brick by brick. Today, Motilal Oswal has presence not just in retail broking, but the mutual fund business and investment banking as well, to name a few. But most importantly, Raamdeo Agrawal has shown the way to thousands of Indian households to invest in Indian equities to create long-term wealth. Stay tuned to Pathbreakers. This is his story, and I'm Neha Bothra. Hello and welcome to Pathbreakers. We are delighted to have you, Mr. Agrawal. It's indeed a privilege to be speaking with you today.
You're most welcome.
Let me start off by first understanding what drew you to the capital markets 40 years back. You've seen so many market cycles. You've seen the capital markets evolve. In fact, now the safety net for investors is much better. So what drew you to the markets 40 years back when investing in Indian equities was relatively uncommon?
I had moved from Chhattisgarh to Mumbai to do my CA. One thing is a lot of this accounting department staff of big companies, they were busy in stock market till about 2:30. Because earlier market used to open between 12 and 2. So there was a lot of talk, intense talk in that accounts department about the stocks. I was reader of balance sheets, I was reader of books. So somehow I had developed liking for a lot of high finance fiction books, you know. So that fiction developed a lot of imagination in my mind. I fell in love with the stock market, and while doing CA, I interacted with a lot of people, and I said, this is the place where I want to make my career. So somehow I passed my chartered accountancy in '83, and then took a plunge in the stock market.
And what was your first multi-bagger? Tell us about that.
First multi-bagger, you know, that was a Vaishya Bank. Vaishya Bank in '91, when this bull run was starting. So I bought Vaishya Bank at about 21 rupees, 21 bucks, 22 bucks. And अगले 2.5 साल में 2000 का भाव गया, 100x. So I think I sold at roughly 2,300 rupees. So that's how I made the first 100 bagger in the stock market.
So what shaped your investment philosophy over the years? I know that you are a voracious reader. I know Warren Buffett is someone you really look up to. If you can tell us a bit about what went into the process of actually honing your skills and becoming a successful investor.
It's a journey in the sense that still the journey is on to become better investor. When I became chartered accountant, that time, see, market was a bucket shop in the sense that it was not developed at all. So if you're a chartered accountant, you can read balance sheet, you can have access to the balance sheet. That itself was a huge competitive advantage. I used to maintain a balance sheet library of 250 companies myself. And anybody who would be having balance sheets, they'll become my friend. My weekend hobby was to read balance sheets. So that's how I built the knowledge base about the companies very early. So starting early is very important. I have a good knack for numbers. So I was able to figure out what is the installed capacity. That time there was licensing. How much is the production, what is the cost ratio, what is the selling price, what is the margin, how is the cash flow. Those things would stick to my head. And then intuitively that how to pick stocks in the sense that the price value gap, how to buy something cheap, you know, and then make money. So we started buying 200 shares, 300 shares in '85, '86 at 15 bucks, 20 bucks. The moment it doubles, we'll sell. Then slowly we started learning the story of hold it for longer period. We started reading books. See, in '80s, one of the biggest crises was there were no books available, which you cannot imagine. That time there were no books available, no magazines were there. Then, you know, slowly in 1991, the books started coming. And then we started getting a little more formal knowledge. And in 1994, I read balance sheet of Berkshire Hathaway and started going to Omaha to listen to Mr. Buffett because he was so impressive. And that changed life in terms of, I found my guru in investing. And then I learned a lot from his writings, his AGM speeches. There was a magazine called Outstanding Investor Digest, OID. And he used to publish the global investors' interviews, the way you are interviewing me. From there we learned a lot. Knowledge was coming in bits and pieces, but the competition was also less. After '93, '94, the market just exploded. Foreign firms came, analyst community got built up.
It's knowledge indeed, sir, but I also feel you have a knack for identifying good companies at the right valuation. I know that you look for companies that have economic moats, companies that are well governed. Beyond the balance sheet, is it something very instinctive that comes to you?
Yeah, see, basically, now I can say investing is about two things, good business and good management. If you get these two rights, I think 90-95% job is done. My approach is to understand the businessman. Business is known. What we don't know is who's the person behind. So when you meet him, is he a kind of a Formula One driver, or is he just another driver, or is he a complete novice?
Yes.
So you have to understand the competence of the entrepreneur, how passionate he is, what is his dream, what is the imagination of his business. That part is what excites me. And when I see that what he's planning is not there in the price, then that's where the price value gap starts coming. Basically, stock investing is about finding the gap between price and value. Then the game starts. Market is a funny place where you can buy 100 rupees thing for 10 rupees and you can sell 10 rupee thing for 100 rupees. Don't be too much reliant on the price for investing. Price is only to see what you think is the value. Is it above the value or below the value? Below it is, you go and buy. If it is above, then stay away.
So, we saw the IT cycle where there was a huge boom and investors who got into that cycle benefited. Then there was a chemical boom in the chemical space. Where do you think is the next multi-year upcycle then help as far as creation of wealth is concerned? Where do you think investors really should be looking from a long-term perspective, of course?
See, only later on you figure out that this was a cycle.
Yes.
But there's
It's
always
hindsight.
But I would say private banks, lenders, I think we are going to have a very strong banking cycle as the growth picks up for the economy. That looks to be one big area. Your insurance, your financialization of the entire savings space, that's a very large space. The sectors which have been hit more recently, like say automotive, they are coming back. IT itself, IT is the second largest industry of India in terms of profit pool. So tech is not to be undermined, and it has the biggest potential to make money. Right now, there is a kind of disappointment with the global recession and all, but that will throw an opportunity to really buy some interesting companies in next 1 or 2 years. Then the India story is building up. So in India story, you have infrastructure, you have cement, steel, contractors, engineering companies, consumer companies. India is a huge consumer market. Then on top of it, the real new one which is coming up is the digital companies. So they were expensive last year. So they have been beaten out of shape for some time right now. And a lot more companies are going to come in IPO market. So I think you'll have ample opportunity to look at.
You spoke about digital companies, so I must ask you, many of these new age tech companies that listed, they, as you said, are beaten out of shape. Are you confident about these companies considering that the path to profitability is not very clear? And there's a lot of skepticism that is now coming about because there is better understanding of the business. Earlier it was very much opaque, but now quarter after quarter when we see the earnings result, there is a lot of concern about the growth. So are you confident about these companies that listed? Is it a point for investors to consider investing in these companies?
See, these companies will become very large. Some of them will become very, very large because any internet business, truly internet has a role to play, will be very consolidating. Like for the very large opportunity, you'll have 1 or 2 companies. You'll not have 50, 100 companies the way it used to be. So these companies, if the size of the opportunity is large, internet is very young. Right now it's just about 12, 13 years. In India, it's only 5 years old. So we have seen nothing of internet and the impact of it in the commerce and all. So as we go forward, it will keep evolving, and it will have a huge impact on some businesses. Equally big impact positively on the companies which are able to exploit it to their advantage. But this is a space from where you'll get to see new set of large companies coming in.
Are they fairly valued at this point?
No, very few companies are listed right now. You'll get to see a lot of global companies coming out from here. Say software companies which will have Indian cost structure but global markets. That's going to be the real game. Whether it is edutech, whether it is some financial tech or some SaaS company or something, where the cost structure will be in Bangalore, but the clients will be all over the world. For that 300 crore cost structure, you can have $1 billion turnover. That kind of magic is going to happen. It's some time away, but digital companies are going to be here and they are going to be very large.
They will be very large. So, investors who got in at this point and are sitting on a lot of losses, what do you tell them? Because in investing, as in life, it's a lot about managing the downside risk as well. What has your strategy been in such times in terms of just managing the downside risk?
No, see, we have made everything here. So I'm always fully invested all the time. But markets have done 15% compounded with all the ups and downs for last 40 years. So I don't see any reason why things will be any worse in next 10, 15 years. And you don't have to worry too much about high and low of the market. Don't bother to, by looking at the market, you don't make money. You have to focus on the stocks, and you have to buy undervalued stocks and just find bargains, buy it. When you think it is fully priced, sell it. Market has its own momentum, So just because market is down 5, 10%, 20%, that doesn't mean anything. That should not scare you out.
I know you're very bullish about India's long-term growth story, and currently we do see a confluence of a lot of factors which put India in a very advantageous position. But the fact remains that we are not isolated from the world, and at a time of global economic slowdown, how do you think India is placed over the next couple of months?
Yeah, so Indian markets, see, we have 2-3 very large forces. One, FI flow.
Yeah.
Second is the oil prices, because we are very dependent on oil. So whatever forex we gain, a lot of it goes to buy oil. So when oil goes beyond $800, $110, that creates kind of a weakness for the economy, in the sense that your current account deficit crosses $130, $140 billion. So that depresses the what you call rupee, and that brings a lot of inflation. So that's one problem. So if by chance there is a recession in the world for the next 1 or 2 years, quite possible oil might be much more reasonably priced, $70, $80. So that can sort out one problem. Second is the FIs. Now FIs are very unpredictable animal. They cannot permanently depress the market, but they can hold the market at lower levels for some time. So I don't know what is going to be their behavior. Though I believe Indian market cap to global market cap is about 3.5%. But some people, they tell me that their global allocation of the institutional investors are less than 1%. And as India's story emerges, I'm sure the allocations for India will go up. So you have the global allocations coming in. I'm being more positive on a longer term basis, like 1 or 2 year basis. They will have to come with bigger bags of money. Second, the local investors. Now local investors, after a long time, if you see relentlessly, the number of demat accounts, the retail is coming in big way. So that is having huge impact, and my sense is this revolution, it's a sort of revolution, from 40 million to 100 million in last 2 years, that going to 200 million in 4 years. So I see this decade is going to be a fantastic decade for investing in India, provided the corporates do reasonably well. Local money is guaranteed to come here. If the global money also comes, some bit of it, we'll have a big party. If market corrects, even better, because then you can buy a little cheaper. But it's very interestingly poised. Global news flow is not very good, but India per se is outperforming market, very strong. India has a very unique story, unique growth story. We don't have problem of inflation as serious as Europe and America has.
Basis,
yeah.
Yes.
So, but if by chance the world goes through serious recession, and there is a lot of restrictive monetary policy by US to pull lot of liquidity, raise the rates to cool down the inflation, it will have impact. Follow-on effect will be there on India, and we could see some serious corrections in the market in between. But longer term, we're good.
So what's your overall outlook on corporate earnings? Inflation is still a concern. It's on a downward trajectory undoubtedly, but way beyond RBI's comfort level. Do you think that given the interest rate hikes that have been penciled in, how do you see companies perform quarter after quarter, considering that the global challenges still prevail?
See, as far the analyst estimates are concerned, they are saying that it will be more like 20% from 730, 740 rupees EPS for NSE, Nifty. They are saying it could be more like 850 rupees for the current year. The real issue is not this year. I think we are more or less done. This year will come to more like 825, 830 and all, because there is a lot of pent-up demand, as you said. The issue is that is this demand, all these demands, margin cycle, all are they going to continue? Because that will be the 23-24, which will be a election year. So I think government spending will be at full peak, and I think generally if the monsoon is good, then 23-24 is supposed to be a good year for the economy. So corporate profit bounce should be very good. So I would think that we are in a sweet spot.
You have taken an interest in the unlisted space as well. In fact, you identified several good companies, AU Finance, for example. Tell me a bit about this relative to public markets. In terms of valuation, of course, it seems that private markets are overvalued. There's skepticism and the factors we discussed earlier. But all in all, if you were to look at the unlisted space versus the listed space, how do the opportunities stack up currently?
See, actually, when we started unlisted space sometime in 2006-07, but after that, now it has become a very mainstream. It is just exploding. So that space is becoming very large. I think last 4-5 years, I think excesses happened in the unlisted space a lot more than the listed space. You can buy undiscovered companies, much earlier stage, help them grow, and then go to the public market and get listed. I find it very exciting. Returns are much higher,
yes,
but it's locked in money. So you get to see the money only after 8-10 years.
What I find remarkable about your journey, sir, is that you are not only an ace investor, but you are a great business person as well. You started from a small securities firm, and today it's a domestic giant in the financial services space. You have presence in retail broking, mutual fund business, investment banking. What went into doing it? What did it take to build this?
It's a future opens, one day by day. So, till 2003 we were only brokers. Then we said this broking thing, it was very cyclical. So we said, let's get into managing money. Our brokerage revenue to our company should not be more than 50-60%. Rest all should come from other services, because we don't know anything other than financial services. So we went about doing iBanking. Then we started doing mutual fund. Then we started doing private equity before that. So like that, all the adjacent products. Somewhere you are successful, somewhere not successful, or limited success. And then we said, now let's do housing finance. And that's how we started Aspire.
Yes.
Which is still kind of yet to become big success. But yeah, we're doing well there. India is growing so rapidly. As an entrepreneur, I can tell you, you don't know 10 years henceforth where you will be. The underlying belt is moving so fast. I think 15-20% growth will come just from the industry. Another 5%, 10% you can get it from, getting little market share, getting little edge, or getting into new business, new geography. You become 10x in 10 years, which is a different scale altogether.
How are you preparing for the future, sir? You talk about a market size that is exponential. There is immense opportunity. How do you want to make Motilal Oswal a legacy for years to come in terms of any succession planning that you have in place?
So company is completely professionally managed. Operations are done by the professionals. So we have to make even more, delegation, in the sense that we have to step back more and more as we grow. Our children are also here, but they are still younger. So between them and us, there has to be a professional layer. Who will take it the next 25-year journey, and by that time, hopefully, these guys will also become part of the professional team. So, but then, company has its own journey. We have designed it in such a way that these companies outlast our lives, because I know financial markets are going to be very exciting. So, the opportunity size in the financial markets are going to explode, and people who are there with the reputation, with the brand equity, distribution, customers, satisfied customers, I think we have to be just there and do our job, and we'll keep growing. So we have tried to put in place a very professional architecture. Let's see how it goes.
I must ask you this. What is the one thing, if you were to specify, one thing that you did which differentiated you from others and which kind of explains the journey you've had, the success you've seen, and the balance you have in life, whether it's health, wealth, friends, family, you seem to have everything in place. How have you achieved it?
No, I think I didn't take the beaten path. When I became chartered accountant in 83, 84, I was not a brilliant chartered accountant. I was just about a chartered accountant. But at that point of time, option was to become a file practitioner, like any other chartered accountant does, or you take up something which you are passionate about. I was passionate about the stock market. I didn't have money, yet I ventured about doing something in the stock market. That kind of redefined the entire life, because there is nobody to help you. When you do something new, there is no guidance, nothing. So you build your own career, and we built it actually, myself and Moti, we built a completely our own architecture, because there were no chartered accountants in the stock market.
Yes.
Then success built success. In 87 we had nothing. By 92, 93 we had, thanks to Harsha Mehta Bull Run, we had about 8-10 crores of money, which is a lot of money for a young two guys. And then from there we kept on building. If there was no success in 1991, then probably, I don't know what would have, maybe would have come back to again corporates or something like that. So it is also important that what you are passionate about, you persevere till you hit the first success. Because a lot of people, they give up before they hit the first success. And success takes that little time.
How did you handle the failures, the setbacks, the challenges?
Actually, we didn't have any major, obstacle.
Because there was competition,
real obstacle was getting to the journey of stock market. Till we didn't open, we didn't know what to do. And like in 2003, we incurred loss for 2-3 months. That time I got a little confused. But then I rededicated myself to the stock market rather than, getting disappointed. So the faith in the market system, market itself, India's story, that has kept us going even in bad times. There were bad times, but we didn't leave the market. So those things somehow, with the help of God probably, that kept the rationality on. See, what happens, it takes time. So this is 30 years journey. From zero to till date, we have created thousands of crores of wealth. So that is possible only because of compounding. And the compounding is possible only if you are in the one type of work you are doing. The moment you go from, say, stock market to fashion or automotive or some crazy place, then everywhere you restart, and then you get lost. You don't know what is right.
So it's about being focused, chasing that one goal that you've set out to achieve.
And second, I would say the passion becoming profession. I never work. It's effortless for me. I love to be, at 12 o'clock night also you can interview me, no problem.
I will take that opportunity, sir. I won't let it pass. Thank you so much for speaking with us, sharing your experiences. And most importantly, we feel we are leaving wiser, listening to you and taking in all these nuggets of information. Thank you for sharing your knowledge with us.
All the best. Thank you.